So, as I was saying, right, today I want to teach something new and I want to show you something that many mentors don't talk about it on online, right? So, this will be a gem and this will be another way which you can add to your portfolio on how to trade the market, right? So, basically, I'm showing you a way which you can enter the market before break of structure. So, this is all about beating break of structures, right? You beat the market before the break of structure. So how do we go about this? So we know that there are many times where we wait for a break of structure and that break of structure never happens. So if a break of structure doesn't happen, it doesn't mean that you necessarily don't have a trading range, right? Before a break of structure occurs, there are other factors which you can take into place to get a trading range. And some of these factors, right, I'm going to be discussing them in this video. So for those that are opportune to be in a Telegram group, this is a free class. And for those that will be watching on YouTube, you can join the Telegram group, right? The link will be in the bio. And you make sure that if you are watching on YouTube, you also leave a like and a comment for this video. Now, let's go directly into the chart and we'll start with a diagram, right? Obviously, we know that for us to have a trading range, the market needs to create a break of structure like this. It creates an inducement, it takes it out, then gives us a break of structure. Now, obviously, there are some new rules which have been added to this break of structures, right? Especially when it comes to inducement that I'm going to be talking about in this video as well. So now when we are looking for break of structures, right, we already know this is what I've been teaching you for majority of the time, right? This is our break of structure. Now the break of structure is believed to have taken out this liquidity below this low and gone ahead to break out structure. Now the only thing I'm going to be teaching to you in this particular module is the updates that comes to that when it comes to inducement, right? Comes to major and minor inducement. Now, what are those updates? The updates are when a pullback starts above the previous break of structures, right? If the pullback starts after this break of structure has been confirmed here, so from here upward, this pullback starts here. This is a major pullback. And if you have a pullback within here, like this, right, before the break of structure, this is a minor pullback. If the pullback happens to be here, right, this is still a minor pullback. So these are the only things that I can show you. So now, what do you do with this knowledge, right? What do we do with this knowledge of major and minor pullback? This knowledge basically is to help you enter trades, right? If you are entering a trade which we have a major inducement, you'll be more likely for that trade to play out in your direction. And if you enter a trade with a minor inducement, it's less likely, right? It reduces the probability of that trade. So that is what I wanted to show you for this. Now let's go into the to the main course of today, which is how to trade without break of structures, without having break of structures, because we previously know that if you have a break of structure, right, you have what we call a trading range, which is from this low to the current high, right? So from this low is where you're looking to get your point of interest. But now, how do we do without these ranges? So let me wipe this out. If you happen to have a market that's pushing up like this, right, if you look clearly here, we have no break of structure. If you look clearly here, we have no break of structures. The market just happens to close above this O high and close above this O high. So these are not break of structures because they did not take out any liquidity. And for us to validate a valid break of structure using true SMC, we need it to take out liquidity, right? Which is the first pullback, which is referred to as an inducement. So now there's no break of structure here, but now you can actually enter a trade here. Immediately the market happens to take out this first low, right? This will now become our liquidity here, right? Our liquidity is resting right below here. So you can see that in this case, right, even though there is no break of structure, we have liquidity and we can enter a trade once the market takes out this low here. So if the market happens to take out this low, right, we we have different scenarios on which we can take a trade here. Now, starting with firstly, we have a sweep. If the market happens to sweep this low, when I say a sweep, let me demonstrate it clearly. So when I say a sweep, right, I mean something like this, right? The market pushes below this low and it doesn't close below the low. So once it pushes below this low and it doesn't close candle body, right, what you can wait for is for the market to push back up. Now, once this market pushes back up here, what we are going to have is on this first internal low here, it will be our change of character, right? That will be our change of characters. And once the market does a pullback like that, we can buy and we target this high. So this is the first. So if we are buying here, this is how our position will look like, right? That's where you put your stop loss, right? Below that sweep. Now, you should make sure that after this sweep, there is a change of characters. Market is showing willingness that it wants to continue to the upside. This is what differentiates you from the regular SMC trader. They just see a liquidity sweep. They know, oh, the market is going to go to the upside. There are many times where the market will sweep a low, continues to the downside. It's because majority of the people, they don't wait for a change of characters once this sweep is occurred. Now, right, if you look at this diagram here, you can notice that you got into this trade even before this break of structure, this valid break of structure occurred up here. This is our valid break of structure. So like I told you, right, these are ways which you can enter the markets before the break of structure. These are ways which you can enter the market before the break of structure. And this is the first type that I've shown you. So now let me go over to the second one, right? Now, in the second one, we have a similar scenario, right? Where the market is pushing up like this. Then the market comes down and takes out our inducement. Now you can see here, this is similar to this one because we have no break of structure. Now the break of structure occurs when the market takes out an inducement and closes above. Here the market has just taken out the inducement. It has not yet closed above this high for us to have a valid break of structure. So now, right, we have what we call order flow. It's the whole of this range, right? The whole of this pullback directly below your inducement. Now, once the market taps into this order flow, right, and happens to give us a change of characters, right, we can then buy and we target this high. So this order flow here like this, it acts as an order block on the bigger time frame. If what happens, let's say you are on the 1 hour, right, if you switch to the 4 hours time frame, you are going to see that this order flow on this 1 hour time frame is going to be an order block likely on the 4 hours time frame. So that is why some of the times we use the whole order flow. If the market taps into your order flow and already gives you a change of character, you can enter. But the downside to this is you have a little bit a bigger stop loss, right? Because you are entering under after the change of characters, you need to wait for a small inducement and enter under, right? So this is how your position will likely look like. It's safe to put your stop loss below the order flow itself, right? So you might have a 1:2 point something in this case, whereas here you had almost a 1:4. That was a 1:3.2, right? So that is it. Then one thing you can see the difference between this entry model and this one is here, right? After a change of character, we waited for a pullback and waited for the market to push below that pullback. Now, this pullback is called entry inducement, right? This is an entry inducement here because even as the market starts pulling up, people are layering here. The market is still looking for a way to trick them and take out the people that put their stop loss directly under this low. Now, if you look at this here, it doesn't have that. Why doesn't it have that? That is simply because this market had happened to already take out liquidity under this low. So the market has already grabbed the liquidity. It has already surprised those people that were putting their stop losses below this low, and the market has decided to move to the upside, right? The market has already surprised those that were putting their stop losses below this low and taken them out. So it already has that momentum that it will maybe not create this inducement here because it has already taken out the people. This one is playing around this entry to take out the people that entered here because majority of these people are obvious. So now if you go over to the next move, If you go over to the next move, right, the next one is just similar to this one, but in that case, we are using what we call an order block. We look at this, right? The market comes down, takes out our inducement, and taps into our, sorry about that, and taps into our order block. So when the market takes out this first low, right, which we refer to as our inducement, we can also wait. We already have this order flow here, so this is already our point of interest. Now what we can do in this case is to refine them to the extreme order block, right? We refine it to the extreme order block to look for a precise entry. So now on this precise entry, right, there are also other ways which you can take advantage of this. Once the market comes down directly to your precise entry, you wait for it to give you a change of characters. You wait for it to give you a change of characters like this, right, and gives you an inducement, pushes below, and you can buy. Once you buy here, you target this high. So obviously there will be a minor zone here. There will be a minor zone here, right? And from this minor zone, some people will choose to buy like this and put their stop loss here and put their take profit here. Obviously, when you put your stop loss here, you are exposing yourself to maybe get stopped easily, right? You can easily get stopped out before the market moves in your direction. So normally I will advise you to give the market more room to breathe out, more room to breathe, right? Don't suffocate the market. So this one, we also wait for an inducement because there was no liquidity grab, and that inducement area here is acting as our liquidity area. So now some people might buy and put their stop loss immediately here. You can see that it gives a risk to reward of maybe 6.47. And for me personally, I would like to put my stop loss below this big low here. I will have a reward of 1:5, right? That is 1:5.4. So that is not bad as compared to the other person, which might likely get stopped out. So these are the models I wanted to show you guys today. Obviously, I will not show you this only on the line diagram. I'm going to go into the chart, and we're actually going to review a trade that we already posted in the group, right? Because when I posted that trade, many people came to my inbox and they were like, how did you get this trade? I don't see any break of structure. How did you come about this trade? So that's why I decided to do this specific class for today. Now, I'm going to be adding one extra bonus to these videos, right? That is an entry module that people don't also talk about. And we also had a trade there last week. So sometimes you might think that when I send a trade, it looks strange. It's just because that entry module is not that common. And we like traders, we don't really talk about it if it doesn't occur frequently, because a strategy is just built on how frequent it can occur in the market. Now, last week was on Euro CHF, right? And the trade is still yet to completely play out as we are talking. Then by the end of this class, we are also going to look at some trades which I'm looking out for this week. So last week we had a situation whereby the Euro CHF had been pushing up like this, right? When it got to a certain point, it started ranging. It started ranging like this. So when it started ranging like this, I was not prepared to enter that market. I was just looking at it. So there's one thing that ICT normally teaches is accumulation, manipulation, and distribution. If you know about that, right, you understand what I want to show you here. Now, after this market spent time accumulating up there, there was what we call a breakout or liquidity grab, right? The market came below and took out all this liquidity because there's liquidity here. When the market, right, we never knew when the market was going to do this rate. But I, as a true SMC trader, and also as somebody that trades the institutional footprints, we just monitor this type of movements in the market. We wait for the market to either grab liquidity on the opposite side right? And we can follow the market. Now, using that the principles of accumulation and manipulation, right? We know that normally this market will normally grab liquidity the opposite direction and go the opposite direction. That is not nothing strange, right? What the market is just trying to do here is trying to grab out, like once the market breaks out under this low, right? People that bought here, people that bought at this resistance zone will be stopped out. And once it breaks out, those people are going to turn now and sell, thinking that the market will continue up, while the market continues to the opposite direction, whereby stopping those the people that bought and the people that sold. So once this breakout occurred here, right? Once this liquidity got swept here, the market pushed below and there was an order block. There was an order block here. The market reacted to that order block. Now, you can see that from here, the market has already taken out this liquidity that is resting below this low. Now, where is the next liquidity that is left? Is the liquidity above these highs. So once the market has taken out that liquidity, given tap into this point of interest and gave me a change of characters, I bought here. Putting my stop loss below the OB, and I was targeting this high here. So this is a story of the Euro CHF trade which I posted in the group this week, right? Which majority of us made money from. I personally, I made about 2K from it, which I posted in the group. So that was an extra bonus, right? Let's go back to what we were talking before we got caught up into this, right? Now, you guys can remember I posted a trade on CHF JPY in the group. This was a trade, right? This was the trade here. So you can see which model did we use here. It's this model here, right? This is the model which we use at this point in time here. What happens here, right? The market was trending up. There was no break of structure inside here. There was no break of structure inside here. The only thing we had was this pullback here and this pullback here, right? This is where our break of structure even occurred. So we never had that yet. So we had to work with the charts looking at half of this. So once the market took out this inducement here, I looked for the next point of interest, which was this zone. It was this zone, right? After that, I looked for my entry. Once the market got into that zone, gave me a confirmation, I bought and targeted that high. So just two things, right? If I demonstrate this out, we have this impulsive move. The market pulls back, goes up here, creates an impulsive move, and goes outright. Once the market comes back, takes out the first impulsive move and pushes down to my second POI. Once I get a confirmation there, I buy, right? And I target this high. You might take partials along the way according to your trading plan, but that is a simple way. You buy with no break of structures. You surprise the market, right? Because majority of these people that trade SMC now, they just wait for break of structures to enter the market, right? They wait for market shifts and all the like. But this is a continuation pattern which you can get and trade correctly. So I think I also had similar trades. I think some of them hit stop loss. Ouch. We had some trades here. This has not activated. So we had some trades here which did not really activate, but this is a break of structure model that I've been talking about. So this one, technically, it did activate and we missed it out, right? Because this is our inducement here. This is our decisional POI. By the time when I did this analysis, this decisional POI was not yet here. This decisional POI was still here because the market was still somewhere around here, right? It had not yet created this last pullback. So I did that analysis and I marked out. You can see that is a pending order on my decisional POI and on another pending, an alert, right? Once the market gets to it, it alerts me. So this is another one on this zone right here. So those are the alerts. They did not get activated and we miss out this trade. I think one of these trade we did I cannot remember the trade vividly, but I think we did another one, right? So this is a zone we had here. So we had this inducement here. We had this inducement here. Once the market took out this inducement, now it did not tap into this. Why? Because this order flow had already been, let me see. I don't think this order flow actually has any imbalance before it, right? This week like this fills it up to here, and there is the imbalance starts from here, and this has already been filled. So this market happens to take out this one. Then when the market came to this one, it just gave a small reaction, no change of characters. It's when the market tapped into this point of interest at this zone here that we had a change of characters here, and the market returned to our origin. I sent this trade in the group. This trade has been taking longer than I expected to play out. I exited it. To cut the long story short, let me not keep boring you. I ran. I never had a whole week to wait for this trade. So I think that's majority of what we did this week. Then let's go to the Euro CHF trade we spoke about when demonstrating. Now, right, look at this. Look at this, right? We see this market push up here, range a lot within this range. After ranging, it pushed below, taking out the liquidity that has built up in this range, right? Took out the liquidity here and then tap into this point of interest. After tapping into this point of interest, it gave us a change of characters. The first time when it tapped into this point of interest, we got a trade here as well, right? We got an entry here and we bought. I was anticipating for the market to hit this zone. I was planning to make about 1.8 from this trade. The market did not hit. It reversed back. Now, when this market reversed back, it came down for confirmation entry here. You can see after this change of characters, the market did not give an extra opportunity for people to join this trade to the upside. So the market then eventually came back to give this extra opportunity here for the people to join and buy. So I still send this extra opportunity. Unfortunately, after the market tapped here, it gave a small change of characters, and it has also given another one here. Though this one in this time frame is a sweep, right? So I'm still expecting the market to go up to this zone and tap us our TP. But this is weekend. We don't know how the market open. I wanted to hold this over the weekend, but this pair, especially, it has low liquidity and normally the gaps are always crazy. So I decided to close and wait for the market. If the market happens to open and push down below, I might get another trade and I'll still target this because this liquidity above this zone is still untapped here. The market has not yet touched that liquidity, and I can guarantee you that in the future, right, the market is going to come and take this liquidity above this zone. It has already taken the buy side liquidity and it's looking to take out that sell side. That is one of the trades we are looking for this week to continue with them. And let's go over to another trade which we had a loss from last week because of some misunderstandings, right? Sometimes people, when people ask, somebody comes to my inbox and asks me why, what is the win rate of this strategy? Now, when I tell him the true win rate of the strategy, the person goes back and the person is like, I'm not sure he has up to that win rate. Obviously, I'm not the one that developed this strategy. I make mistakes. And when I make those mistakes, you count them as the strategies among the strategies win rate. But the truth is, actually, when they say a win rate of a strategy, right, when you execute it to the fullest, what happens? Right? You exempt those mistakes, right? You execute the strategy the way it was developed to be traded. Because when somebody develops a strategy, as the person is passing it, right, he takes the strategy, teaches it to the next person. As it gets to the third person, right, there's what we call it diminish. There's this thing we call in programming, in computer, right? Yeah, signal, the signal, once it moves from point A to point A, it loses it loses some of the original information. The information becomes weaker. So you need to, if somebody doesn't learn directly from the source, right? There are some things that the person is still going to omit in the trade, which might hurt the strategy he's trading, but it doesn't mean that the strategy has a low win rate. So this is USD CAD. Obviously, we know that we have been monitoring USD CAD to get to this zone, right? To get to this zone, and USD CAD came short of this zone some weeks ago. But now, when the USD CAD came short of this zone, it started buying. I myself, I entered a trade here based on daily bias. Daily bias. I've not talked much about daily bias, but in the future, I'm going to talk at it. But if you look at the very old videos on my YouTube, you are going to see it. So this model here is similar to the model I thought we started this video with it, right? This is a bearish example. The market is pushing down like this, right? It creates a pullback. It pushes down, creates another pullback. Then once it comes up, it takes out the first pullback, and it has given us a change of characters. So now what acts as what here? So first, if I'm marking this is my inducement. So there's no real break of structure on the daily time frame. This is my inducement here, right? I mark it out X. That is how I denote my inducement. Now after my inducement, I have a POI. I have a POI. Now I'm taking the market as from this zone here, right? Because if you want to look above it here, you are going to see this break of structure here and our extreme POI somewhere around here. But now the market has not gotten to that. So once the market has taken out this inducement and tapped into this other block directly above our inducement and shows us the willingness to sell, then we can expect the market to sell down to this zone. Unless the market violates this and keeps pushing up with this internal structure here, then before we know that, okay, the market is looking for an upside. Currently, this market has not yet violated that. The market is bearish, fully bearish, right? And with this, please turn on that thing. Is making a lot of noise. So with this, we are going to add another confirmation, which I am recently introducing to majority of my trade, which will be a CRT model at this level. I myself am expecting this market to come below and tag my TP under this low here. So if I happen to switch down to the 1 hour time frame, basically what you can see is this market was going up. Now last week the loss we took was because we had a strong zone here. We had a strong zone here, right? The market was still bullish in this case. You look at it very well. If you look at it very well, you are going to see that we had a change of characters here. When this market was pushing down, this was our internal structure, right? This was our last break of structure in the downside. Then the market came above this zone and gave us a change of character, showing willingness that this internal structure is about to continue bullish. So as from after that, the internal structure continued bullish, and we had a recent most break of structure here. After a recent most break of structure, we waited for inducement and we bought. Now the thing is, I did not consider the daily time frame when I was trailing this in internal structure, so I forgot to check. So it happened that the market actually tapped into a bigger time frame POI, and so giving us an internal change of character. So this internal change of character has shown us willingness for the market to continue to the downside, right? So after this, we have our major inducement here. We have our only point of interest here, because if you look above from here, you see that everything is already mitigated. So I'm looking for the market to drop and tag me out here, right? So this is my inducement here. I'm waiting for the market here. So come tomorrow Monday, if you have some sort of a pullback, a deeper pullback like this, you can join me in the sell. And yeah, there are two ways which you can put your stop loss here, right? You either put it risky on this low or above this high, or you can slightly extend it to this zone, right? To just be safe. Either way, Putting it above this zone is a 1:5.3, and putting it just at this low zone is a 1:8.93, right? So you should not go for huge risks to reward. We already caught this one the day the reversal happened, right? I think many people were happy with this move here. But after that, the market happened to continue and move for a very long time. So let me see if there happens to be any other pair I've not checked. I will. Oh, we had EU, right? We had EU. That EU, I'm still doubting it. Though I took the buy, but I'm still somehow skeptical of the pair. That pair likes to swim me out. The other day, GU swept me out. GU swept us out. That day, I've not. It took me a very long time to recover from that trade opportunity. So the reason why I'm skeptical about this EU is because when I look from the 45 minutes time frame, I see that this actually is a sweep. But now I was concentrating on the 15 minutes time frame when I gave this trade here. Okay, so here you can see that this move, right? This move closed above this high, though it did not sustain, but it closed above that high. So that left us in a point of interest here. So I bought this on this is a trade which we bought on in a Friday, right? Friday evening, and we happen to get out here. So I'm going to see there's this another point of interest here, right? If the market happens to open and push back down to that low and shows me willingness I want to buy again, I'm going to buy and put my stop and put my take profit here, my stop loss just below this low. So I think that is it. This was the first trade we got. Then we got another one here, right at the breaker block that was here, and yeah. So let's go into questions, right? Let's see who has a question. If you have a question, all you need to do is you raise your hand up. First person raises the hands up. Okay. Alpha Berry. Yeah, up. Alpha Berry are up. Mr. Clean, you are also up.
Am I hearing me now?
Yeah, I'm getting you 100%.
Are you hearing me, right?
Yeah, I'm getting you. Go ahead.
Hello? Okay, so I'm asking like by the time the market on the Euro USD, your last entry before the market closed. So by the time the market tap on the demand zone, did you enter like aggressive, or you just find a change of character on lower time frame? So what's your lower time frame? Once you have like a 15 minutes higher time frame, what's your lower time frame change of character on a 15 minutes? Do you go to the 1 minute, or you wait for the 5 minute?
I go to the 1 minute. So there was actually a 1 minute change of characters here. You can see from the screenshot I sent in the Telegram group, right? You can see a change of characters at that trade. I waited for a shift.
Yeah.
So I normally use around 1 minute and 3 minutes time frame.
Okay.
But I'm sure you must have noticed.
Because like sometimes once you go to
you might have noticed, right? I don't really trade that very small time frames.
Yeah.
Yes, I don't really trade that.
For me, like